Who's flipping through the slides?
I'll do that.
Great.
Sai will do that. What's up?
Sai will do.
Okay,
Sai,
so Sai is sharing your screen, right?
Sorry, Shashender, what did you say?
Sai is going to be sharing her screen.
Yes.
Yes.
So we are live right now. Folks who are watching us on YouTube, can you let us know if our voices are audible? And how is the audio and video quality? Is it okay, or do we need to do some changes? Thanks for confirming, Shivang and Anisha. Thanks, Deep. We'll get started in a couple of minutes. Meanwhile, if you have any friends who you think might be interested in this session, please do invite them. And we'll get started once we have around 100 people watching, or 8 to 5. And then whichever comes earlier, we'll get started then. Okay, while we wait, just a quick show of hands. Can we like put in chat how which campus are you joining us from? Pilani, Dubai, Goa, Hyderabad. Just let us know in the YouTube chat which campus are you joining us from. Do we have anyone from Dubai, or we have? Yes, I. Thanks for responding, guys. Meanwhile, if you guys can share the YouTube link with your friends who are from BITS and who might be interested in this domain talk, please do that so that we have more number of folks who can benefit from this. Here, and we are planning to keep it 1 hour, 30 minutes. So we'll start with a small 1 hour session on the deck that we have prepared and then follow it up with 30 minutes of question and answer session. Rahul, can you please ping me the link for Slido? I'll just paste it in the YouTube chat. So I'm going to paste in YouTube chat a link for Slido where you guys can go and upvote the questions which have already been asked. Or if you want to ask a different question, you can do so there. And meanwhile, if you have any quick questions for me or the AM team, please feel free to post them in the YouTube chat and we'll try to answer. Okay, I think we can get started. Shashi, Shashender, Pratul. Can we start?
Yeah, sure.
Sure, we can start.
Okay. Welcome, guys. So this is the fourth session that Alumni Mentorship Program team is organizing for BITSian. So we did 2 sessions on analytics and consulting last week, and yesterday we had a session on product management. So AMP, just in case you guys don't know and are joining for the first time this session, then AMP is basically a program which is started by BITSian alumni for current BITSian students. And the objective is to help you guys out in whatever career paths that you're taking. So be it you want to join as a professional in a software industry or finance or analytics, or if you want to continue doing some research or you want to pursue some like UPSC or do MBA or anything else, we want to be there to help you and guide taking the right decision. So there'll be a lot of things that we will be doing. Right now, we are focusing on placements. That's why we have started this series. We'll talk about different aspects of domains. We'll introduce you to what are the skills which will be required in domains, how you can acquire them, which companies come on campus for placement, are the internship opportunities lying, and stuff about resume, and we'll also try to do some mock interviews and towards the start of the next semester, just before the start. Right. So that's about AMP. Today, let's focus on finance. So I think before we get started, just uh, get an understanding of how much are you aware of finance. I have a quick question for you. What do you guys think different finance professionals are doing currently? So what kind of roles do you think, to give you an example, you can say something like banker or let's say an investment advisor, right? Those are a couple of things which come to my mind, at least when people say finance professional, right? So what do you guys think finance professionals are doing. Just let us know in the chat. Okay. I hope the question was audible. So the question was, what do you guys think finance professionals are doing? Let us know in the YouTube chat just to get an idea of. Rahul, can you hear me? Rahul and Sai?
Yes, Utsav. Yes.
Okay. People are saying that my voice is cracking.
Yeah, for me also it is breaking a bit. For Sai, I think she's able to hear you properly.
Okay. Can you guys just repeat the question just for the audience?
Sure. So guys, what do you think finance professionals do? You can write a short answer in your on the YouTube chat, whatever you feel. Are we getting some answers? IB, business development, trading roles, asset management. Okay, great. Okay, guys, one more question. What is your favorite finance movie that you have watched till now? Have you watched any finance movies? Something related to finance, like some scam or anything? Cool, great. So I think people are saying Wolf of Wall Street and The Big Short, Moneyball, Margin Call, Scam 1992. Great, perfect. So I think Utsav, we can move ahead.
Okay, so we have pretty stacked group of speakers today. So Shorya, why don't you introduce yourself and we can move to other speakers then.
Yeah, am I audible? The voice, right?
Yes, sure. Yeah.
Yeah. So, hi guys, I'm Shorya. I graduated in 2018 from BITS Pilani Hyderabad campus. My major was manufacturing engineering, and like pretty much all of you guys probably, I pursued a minor in finance. Right after that, I did my PS2 with Nomura Services India in their credit risk reporting division. And ever since, for the last 3 years, I've been working with the credit risk middle office here in the Powai office. And over the course, I've taken like multiple roles within that credit risk vertical or risk vertical in general. Yeah, that's pretty much about me.
Shashender, do you want to go next?
Of course. Hi, everyone. Hope everyone's able to hear me all right. So like all of you and like Shorya, I graduated from BITS 4 or 5 years ago, back in 2016 or 17. And I did my majors in economics, and I also was studying electrical engineering on the side. After BITS, I moved on to working at JP Morgan for 1 or 2 years. So I was a part of the sales and structuring desk there for the European team. And then after that, I was in the United States for pursuing my master's in financial engineering from Cornell, and that led me into my current role. So I'm currently a part of an investment manager called AllianceBernstein, which serves private clients in terms of their investment objectives and the money management needs. So currently I'm based out of New York, and it's great to see all of you writing so many good movies in the chat, and hopefully we can continue that conversation with the speakers in the next hour or so.
Great, thanks, Shashender. Hi guys, good evening. This is Shashi this side. So similar to other speakers, so I graduated from BITS Pilani in 2013. I graduated with a BE honors from Pilani campus, and it was in chemical engineering. So post my engineering, I started with a financial services firm called BITSAA Financial Services. I'm not sure if it still comes on the campus, but maybe some of you guys know. So it's a very core finance role. I worked there for a few months, get my hands on the job. What exactly finance is, probably a lot of questions you have. I also had at that point of time, and I sort of got trained on the job. So, and within 6 months, I joined BITSAA. I moved to JP Morgan CRG. I think it was a very good role, gave me good exposure, and set the benchmark right for me. And then, within 6 months, again, I moved to an Indian investment bank called Ambit, where I worked for around 1.5 years. And then post Ambit, I worked with a private equity fund back in India for about 3.5 years. So this private equity fund was called True North. In 2019, I decided I'll pursue my MBA. So I came to London to do my MBA from London Business School. I just recently graduated, and currently I'm working with WEF. It's a VC fund focused on fintech and emerging markets, and I'm based in London. And I look forward to interacting with you guys.
Pratul, can you go next?
Pratul, you're currently on mute.
Hi guys, this is Pratul. Nice to meet you. Is my video working currently or?
Yeah, it is.
All right.
Yes, it is.
So I graduated from Hyderabad campus. I was class of 2012 to 17, B3 plus A3. After completing my graduation, I did 1 year of practice school in MSCI Mumbai, where I was working in the quantitative equity research team, building factor-based indexes. And right after completing my PS, I came for grad school. I did my MS in operations research with a concentration in financial engineering from Columbia University. During my grad school, I interned with a global hedge fund called AQR Capital, where I was working as an algorithmic trader. And after finishing my grad school, I have been working with Deutsche Bank as an interest rates, derivatives, and exotics trader. The main agenda for me to join the panel was I basically want to drill down deep into what are the differences between different trading roles. I mean, we have all seen movies and we have seen how trading in the US and European markets look like, but it still used to be very fuzzy when I was back in school about what exactly is a quantitative trader, what is an algorithmic trader, what is an electronic trader, what is a prop trader, high frequency trader. So we're going to dive down deep into the differences between each kind of trading role, and hopefully you'll be able to make use of the information and see where you can see yourself going into the future, into what kind of trading roles do you like, what are the skill sets involved, and how exactly do we break into the industry. Another point to note was I was reading the chats and a lot of you mentioned Wolf of Wall Street. I just want to make clear Wolf of Wall Street was a bad example of what the finance world looks like. Don't be prejudiced, that's not reality. But there are other good finance-based movies that we can give you recommendations on, which would be quite useful. I think we are good with the introductions. We're ready to kick it off. Shashender, would you like to take it forward?
Yeah, for sure. So I think here we have Shorya and Shashi walking us through a little bit about what the broad branches in finance are and what opportunities you could find out of your, say, BITS program and say even after grad school. So I think Shorya would like to jump in and talk a little bit about fintech first and insurance.
Yeah, thanks. So for the audience in general, I'm assuming that for you guys, finance in general is like a single term, whereas once you go ahead and join the industry, there are just a numerous number of niches that you're going to come across, and they're going to be various verticals that people work in, and a lot of work is correlated, but at the same time, there are very specific specializations that people will eventually evolve into. So the idea of this particular slide and what I'll be speaking of in the next 5 minutes is to give you a generic idea of what we're talking about when you're talking about finance, and try to broaden the perspective that you guys have at this particular point of time. So the minor in finance, like the number of you guys who will be pursuing a minor in finance are, at the end of the day, they're the core subject at any kind of role that you're going into. You will need to have a certain idea about valuation. It's good that you have a basic idea about accounting and understanding what those balance sheets and P&L sheets look like, because those form the basis of everything. So once you get into finance, so here there's the primary sector that we're talking about in finance, or what the general idea when you're talking about finance is the financial services industry, right? So all the movies that you guys have seen are either dwelling into the investment banking, the banking services bit of it, which involves everything from investment banking to your M&As, advisory practices, and all of those kind of things, right? But in order to make that machinery working, there are also a lot of other teams which are working in sync with all of these traders or investment bankers in order to facilitate the entire process, right? So at the end of the day, when you walk into a bank, you'll have traders, you'll have investment bankers who are working on deals, you'll have M&A guys working on valuations, you'll have risk and quant guys who are enhancing models, working on different kind of exposure matrices, trying to compute what kind of risk a bank is getting exposed to an extent that you will even go as far as finding people from with a background in law, working with banks in order to construct those legal agreements that you work on in order to work on a particular deal. When you're signing those deals, what are the legal agreements that you need to go through? There is a huge chunk of regulatory work that goes on. As you know, that most of the financial services, they work under the purview of one or the other regulator from time to time. SEBI is one of the Indian regulators that you have out here in the equities market. Similarly, pretty much all countries have their own equity regulators, and then there are standards and principles which are used even by with banks and other financial institutes all over the world in order to maintain proper practices and make sure that the market is free and all of that kind of stuff, right? So now within financial services, so by the way, when we go ahead, we'll be diving deeper into most of these sectors, and all of the speakers that you have out here have their own expertise into particular domain, and they'll be explaining you further what we are referring to. So banking services is most of your stuff related to investment banking, M&As, working on structured products and trading. That's further bifurcates into the buy side and sell side of things. Talking of risk and quant, so risk management is like the second next the second division that comes in when you're talking about investment banking services, especially in a bulge bracket bank. So you're talking about risk management practices that further gets divided into your market risk side, the credit risk side, operational risk, which basically works with human errors that might be coming into the processes, working closely with regulators to set on limits and making sure that the international norms are being followed. The quantitative bit of it is essentially when you do dive into the systems that are out there. So there are trading strategies which are being designed by a lot of algorithmic trading. At the same time, you have this the risk computation part of it, wherein there are Black-Scholes models and stochastic calculus, which is being used in order to assess the kind of potential future risk that you have at hand, the value that you have at risk presently when you're trading in the market, the position that a bank holds. So this is what the senior management and the regulators are looking at when they're asking you, when they're asking the banks in order to make sure that they are taking informed risk and they're not overshooting the kind of capital and reserves that they have. And so this is the basic chunk of the financial services. Besides that, on the other hand, you'll find a lot of these insurance and rating services. So these are services which have a very specific niche. Now you do like like the insurance market that you would be a little familiar with would be like the personal insurance and the life insurance market. But as you go into the sector, you'll realize that there are firms that have a lot of very specialized insurance product for within the financial services industry or for specific business needs. So all those insurance entities, and there are very large entities, especially based out of London and US, who are exclusively dealing in these kind of insurance products. If you guys would have an idea of what actuarial sciences are, a major aim of those kind of studies are in order to assess and construct such kind of financial instruments in order to make insurance profitable, both from a client perspective as well as from the provider perspective. And there are rating indices services. Now, these are services which your bulge bracket banks or your VCs or your private equity might use. So it's more of a B2B concept, wherein these guys are providing ratings to the existing firms in the market, to the banks themselves, helping them ascertain whether a particular organization that they want to get into is profitable or something worth investing for, or what kind of risk they might be getting into when they're looking to invest in those kind of firms. And the fintech end of it is something that has largely evolved over the last 2 decades, wherein like you do understand that finance has over and above now become a very tech-oriented role. You have a lot more technological innovations which are coming in. So there are companies, so there will be a fintech division or a technologies division within pretty much every bulge bracket bank or VC who are working on either constructing systems for a particular bank working on particular products or niches, or you have certain kind of firms like within India, you would have examples of something like a payment service provider or a non-banking financial services, which have a very niche kind of a domain wherein they're working either on wallets or providing zero brokerage investment services, or getting into niches of, say, financing capital for operational costs to be borne by companies, or shipping and trading, export and import work. So that's a particular niche within the fintech market. So that's the general overview. As we go ahead, we'll be diving deeper into the particular sectors and giving you a generic idea of what you can expect from the day-to-day work of those particular verticals, and what it looks like, and what your career progression, or in general the study or the research that you'll be doing would look like. So yeah, that's about it.
Great, thank you, Shorya. And quickly, just adding probably from my experience to probably three pieces there. So one is the banking, sell-side advice, services, and the buy-side services. So as you guys have mentioned, that I started with an investment bank. So banking usually entails investment bank and a host of other services. So it depends. So sometimes you'll see there are M&A advisors who are only dealing, providing services in an acquisition or a merger or a capital raising, versus you could have full services, investment bank who would have an NBFC arm, a market desk, someone like a JP Morgan. They have almost everything. So banking in itself is an umbrella, and there are multiple different factors under it. I think typically for people graduating from BITS Pilani and with their background, and this all comes from a non-technology background. So bear in mind that even though I'm from Pilani, I have zero coding skills. I don't really use it at work. It's a core finance role. So I've done my MBA in finance. Even prior to MBA, I was doing what probably a CFA would read. So all of these insights will come from that perspective. So banking, one, it covers investment banks and M&A advisors. So investment banks could be your bulge bracket banks, the investment banking divisions in JP Morgan, Credit Suisse, Goldman Sachs, and these are the guys who typically you see in news articles. When a company A acquires company B, so usually a financial or a deal advisor is that investment bank. And then within the investment bank, if it's a full service investment bank, you also have a markets desk, you have an equity research team, you have a sales and trading team. So Shashender and Pratul. So Pratul, for instance, works at Deutsche Bank. So he works in the quant trading desk for that bank. So you'll have multiple different roles which you can target according to your skills and your appetite. And within banking, so sell-side services, I think there is some sort of an overlap. So sell-side services usually is put against buy-side services. Sell-side services usually includes your investment banks, M&A advisors, as I mentioned. These are the guys who get involved in the transaction, but really don't have skin in the game, per se, or they're advising a third-party client. Buy-side services usually entails where you have skin in the game. And typically these buy-side guys would include private equity funds, hedge funds, venture capital funds. So all these guys, and pension funds, the guys who actually impart these funds to invest that money. So typically you will see these sort of, classifications in the market when you do your research. And within, I think the important point to keep in mind here is that there are different brackets within financial services. Then within banking, sell side, buy side, risk and quant, you'll have further different segregations. And different, for all four of us, I think have different work profiles. So it's not related to, let's say, a product manager role or a data analytics role. You'll have some sort of a common connect, but probably, for instance, in my role, I don't use any technological knowledge at all. So I have zero coding skills. I'm telling you this. I got an E in CP1. I got an E in CP2. So that's the sort of background I have. But yet I've managed to reach this side because I focused on what my strength was, and you can probably reach that. So banking, sell side and buy side, very limited companies would come. I think in subsequent slides, what I'll give you is a walk down as to even though these three things are separate, there's usually a path to reach from one, from banking to buy side. So you can't directly go out in the market today and you want to say that, okay, I want to join a VC fund. It's very hard. It's doable, of course, but usually I'll explain to you, what kind of path, if you guys are interested in that, what sort of path you can take. I think, yeah.
Yes. Thanks, Shorya, and thanks, Shashi. I think that was very helpful to kind of set the stage about the conversation we're going to have on the following slide. So if we could please move to the next slide. So here we're going to dive a little bit deeper into roles that are more personally connected to what we do. This is a slide that would tell you about what broadly a description looks like for, say, a given set of roles, and then what options you have in terms of career paths and what roles you would possibly be working with. And to be more actionable on that front, we also have some PS companies and placement opportunities listed there so that you can kind of look at them, connect with people from those firms. So I will start here with the banking as a service in the financial services industry. So you can think of banking as, say, the bridge or say the plumbing system between someone who has capital needs and needs to be connected to the capital markets. So banking serves that purpose by providing many services. Those include things like market research, things like providing due diligence on opportunities that could connect people who require capital with the people who have capital. And Shashi primarily is a part of this process, which you can typically see in the form of, say, investment banks, venture capital funds, private equity funds, who are either carrying out market research or are constantly providing services that serve as a bridge for someone who needs to be connected to the capital markets. So this is broadly how banking would look like. But as both our speakers earlier pointed out, this role could look very different in the context of a given company, of a given function. So I think each of these have a whole gamut of people working together to keep this up and running. But broadly speaking, this is how you would describe, say, banking as a function. I would like to move on towards the right half of the table, the quant roles. Now, the quant role is a very broad term in terms of what you would be doing. It again depends on where you're performing this role. So quant roles can be found in every part of the finance industry. You can find it in a sell-side bank position. You could be either in the global markets team, or you could either be in the equity research team. You could find yourself useful, say, even in investment banks who are kind of now tapping into data-based insights to perform, say, market diligence and be able to connect people with the capital markets. You could also find these roles, and this is where I think quant gets really, really powerful, is on the buy-side investment management. This is where typically I kind of have more experience, personally speaking, into working on, say, building investment strategies. You're working on building long-term portfolios for clients with, say, most of the times complex financial situations and investment objectives. So this is where the quant people come in with their skills in mathematics, with their skills in statistics, with their skills in finance, and kind of bring all these things together to kind of, say, take a view for the clients to serve their, say, investment objective needs. So depending on these three businesses, or say 4 businesses, you would find a quant role useful there. And the roles typically look like something that's programming heavy. So as Shashi said, the roles that you find in banking could be less quantitative or less programming intensive. These roles are looking for people who can bring together math, statistics, programming, and finance into one single spreadsheet, or say a coding notebook. And you would typically be working on, say, building models or building platforms that are required to kind of keep the business up and running and improve that and consistently refine that for client needs. This is typically what you see in places like JP Morgan, Morgan Stanley, and Goldman Sachs. These are some sell-side names that you guys, all of you, would be familiar with through the practice school division. But there are a bunch of, say, buy-side firms who, at least in US and Europe, are actively recruiting quants as their core teams to kind of move their business forward. So yeah, that's pretty much what I would like to say in this slide about banking and quant. I think Pratul is going to help us through the trading aspect of this presentation, and then Shorya can jump in for the risk.
So on the trading side, there are primarily 2 different types of traders in the market. One who take views, who has an investment research, and they want to execute their portfolio, and they're basically like either betting or speculating on the investment objectives. And the other is a market maker. I was going through some of the questions that you posted earlier, and a lot of people are still not familiar with the term market making. So market makers are basically either brokers or dealers who provide liquidity in the market. What that means is, for example, if you have a view on, let's say, Tesla, and you have a view that Tesla is right now trading at $600, but in the next 5 years, it's going to go to like 4,000. you want to speculate on this view by buying a large block of shares in Tesla. There are a couple of ways you can do that. You can either go to the exchange directly and buy it from there, or if you have a large order that you want to place a size in the market and you don't want the market price to move as you keep buying shares, you go to like high frequency traders or flow traders or dark pools, for example, who provide liquidity in a more privatized exchange. On the market making side, these are the people who are actually providing liquidity. That is, they'll be the ones who will be showing you a price on if you want to buy 1,000 shares of Tesla, at what price they would be willing to sell it to you. Or if you want to sell Tesla, like a market maker will be providing liquidity by buying it from you. So what they're essentially doing is you're buying it from one side and selling it to the other. And the way they make money is through the bid-ask spread. Basically, they're bidding into the market when you're selling, and they're selling into the market when you're buying. And they're buying low from you and selling it high, and they're just capturing bid-ask spread. The difference between the two strategies was you have an investment view on Tesla is going to go from 500 to 4,000. So if you're looking to buy some shares, you don't mind paying, let's say, $601 or $602 to get execution, like $1 or $2 from the current fair value. You don't mind paying that execution cost because you're trading based on an investment thesis. But the market maker, he is not trading based on investment thesis. That is, he's not assuming risk, what we call risk of the equity. He's not trading on a view that Tesla is going to go to 6,000. He's just providing liquidity to you. So if you're willing to buy Tesla right now, he will be selling it to you at $602, capturing that $2 of execution cost. And immediately his job is to offload that risk because he's still holding a large chunk of inventory or the Tesla shares in his book. And if the price moves against him, like, he's going to lose money because he did not have a thesis on if Tesla is overvalued or undervalued right now. So his immediate job is to hedge his Tesla exposure. He can do that in a couple of ways, either by selling a correlated asset, that is an asset that moves similar to Tesla, or he could be just offloading Tesla inventory itself by going to another seller and buying it from you. So market maker is the person who's just buying low and selling high constantly, and he's capturing the bid-ask spread and assuming no risk of the product. But if you're a trader on the buy side, you basically just want execution because you have an investment thesis behind you and you're speculating on that view. The banks are mostly market makers. They are not prop shops anymore. That is, they don't assume, or they're not supposed to assume risk. These regulations were changed after 2008 by what was called as the Dodd-Frank Act. It basically created a bridge or a Chinese wall between the buy side and sell side divisions of a bank. So right now, the traders on a market making desk and a bank, like for example me, I am not ideally supposed to keep a lot of risk on my books. So if I'm trading with a hedge fund, it is my immediate job to offload that risk and sell it to a different counterparty, and basically just like capture a riskless bid-ask spread and make money out of it. For a prop trading shop, they're also similar to a buy-side firm, but they don't report to their clients. Like, they're trading their own pooled money, they're trading the founders' money, they're assuming risk, and they're providing market-making services as well, but they're keeping 100% of the profits. If you're a trader on the buy side, you're essentially managing your client's money. Your clients could be either a large insurance fund or an endowment fund or a pension fund manager. So you're answerable to your clients. So you basically make money by either generating profits and getting a percentage out of it, or you also get a certain percentage of the amount of assets that you manage. It's called like 2 and 20 rule. For example, you get 2% of the total assets you're managing and 20% of the profits that you're generating for your clients. That's on the buy side. On the sell side, you're on the market making desk. So you're basically providing liquidity. And on the prop trading shop, you're kind of doing both and doing it in a more sophisticated way through algorithms. But you're not answerable to your clients since you're trading your old pooled money, or you're trading your founder's money and keeping 100% of the profits. So for banks, risk comes into a major play here because of the Dodd-Frank Act that was passed in 2008. So there are risk teams constantly monitoring the risk of the trading desk. And daily we get emails about this is the kind of inventory that you hold right now. They run various VAR scenarios by applying shocks to the market. For example, tomorrow, if another crisis breaks out and suddenly the market rallies 25 basis points, what is the kind of loss that you mark on your books given your current risk positions? So the risk team, they work very in synergy with the trading team on a bank, and they're constantly reminding traders of the amount of risk that they have on the books and how much do you need to offload every day. So I guess Shorya can shed more light on the risk part of the trading desk. Shorya, are you able to hear me?
Yeah. Hey, thanks, Pratul. So now going into risk, so essentially most of the services that we were like already spoken of in terms of banking and trading and quant services, these are essentially the places when you roughly want to classify what a front end and a back end is. At the end of the day, risk is something that harbors somewhere in the middle, maybe nowadays, because there's like a new term people use called the middle office, but it primarily sits behind because it's not a revenue generating service at the end of the day. But nonetheless, it becomes more important because, like Pratul mentioned, the Dodd-Frank Act, and pretty much every time any major economy or the markets in general have gone through a crisis or a major market correction, there are new policies that come into play. Regulators become more stringent, or there are just new learnings from like the financial institute point of view, and then they want to enhance their risk strategies in general across the board. There are other back office services as well, which like extend into stuff like just operations, the day-to-day working, the admin functions, but those are even far more not related to the actual trading and banking activities that are happening either in these bulge bracket banks or otherwise. So now risk primarily gets classified into three major domains. So any bank that you'll be walking into today, if you go for your PS2 or you're working towards a bulge bracket job, what you're looking for are three major divisions wherein it works on credit risk, which are normally from a perspective of assessing risk on which have a very long-term exposure down the line, and your market risk, which is something that Pratul already mentioned, that you're looking at the kind of risk that the traders are holding on a day-to-day basis within the firm and how exactly are we monitoring it. So here now risk management function, if you want to look at it as to why are we doing it, why are we what are we trying to manage here, is there are two perspectives to it. So the one part is obviously your senior management. So at the end of the day, the upper management and your firm's leadership is looking to it always has a plan that it goes on to every year, right? They have certain trading strategies. They know the kind of capital that they'll be raising. They know the kind of liquidity that they would want to maintain. So besides these trading activities, they need to have a control of what kind of risk they're exposed to. So that is what the risk function is doing. It's giving the risk managers and the senior management an overall perspective on the kind of risk that we have, and do we have enough capital to back that kind of risk. And like Pratul mentioned earlier, that you have other places wherein you're trying to model the risk that you have. So if you have different kind of stressed scenarios, so stressed scenarios are essentially either historical or simulated events wherein what happens if you lose so and so kind of base points, if the interest rates go haywire because of some kind of geopolitical situation or just market moves in general. Risk just expands a little bit into some other kind of roles as well, wherein risk is the place which has all the IT infrastructure working in order to compute that risk. Whenever you hear of these stochastic calculus models and risk assessment, this is all happening within the risk universe, wherein you will have different kind of engines, which are essentially computer simulations running at different confidence interval in order to assess what kind of potential risk that we might be facing in the future. So this also ends up involving a lot of project management teams and just general risk and control and governance. So the third aspect of which is maybe which doesn't get a lot of limelight is the operational risk bit of it. The entire bank is constructed out of people, of traders and bankers working on multiple fields and like n number of trading desks. So there arises a concept of human error. So risk also manages the operational end of it. How do you over the course of period enhance that there are less and less human risks that a bank is subjected to, and how exactly do you make sure that those can be mitigated as soon as possible? And most of the roles, when you go for your PS2s, a major chunk of of most of these kind of roles that you go into when you're in your PS2 are either risk or global markets roles. Markets basically tie back to the back office of most of these banking services, wherein you're supporting the desk, you're supporting the IB team in the regions and stuff like that. And from a risk perspective, you're trying to assess like the general risk portfolio that a particular bulge bracket bank is handling while you're going for your PS2. So that's pretty much about it when it comes to risk. You can obviously dive deeper when you go ahead with your own research.
Thanks, everyone. That's very helpful. So on the next slide. Next slide. Yeah. So great. So on this, we are going to be talking about specific functions within the business. So this is not going to take a lot of time. And I think we have Pratul and Shorya and Shashi, all of us jump in and talk a little bit about what specific functions exist on each of those arms. Go ahead.
Sure. So we will be primarily talking about the buy side and the sell side. On buy side, as it has been discussed before, there are various type of funds and asset managers who are basically trading on an investment view. So they have portfolio managers who are getting money, who are raising money from their clients, and who are basically like doing all kind of market research. They're studying environments all across the world. They're looking at different asset classes, and they're forming an investment thesis on the kind of products they want to speculate on. Whereas the sell side is mostly they're structuring notes, or they're structuring securities, they're structuring different instruments to cater the needs to the buy side. Prop trading, high frequency are independent divisions of their own. They are very less transparent. You won't find much about them in the market news. They trade as their own entity. They're not much regulated as well. So not much information is available on the daily functioning of a high frequency trading firm, for example. We only come to know when there are, like we've seen examples when certain high frequency trading firms, they have faced bankruptcy due to adverse market effects. And since they trade completely on an algorithmic basis, without less human intervention, so if some trading algorithms, they go wrong against them, like there is a very high chance that the firm is going to go bankrupt in 1 or 2 trading days, because it takes a lot of time to reverse your algorithms and liquidate the positions that you already hold. We should move forward and dive deeper into buy side and sell side.
Great, thanks, Pratul. So let me just give a quick overview of the buy side and sell side, my side of things, what I've been up to in my experience, and maybe Shashender can sum it up from a market's perspective. So buy side, guys. So I think one quick, usually the question which comes to mind is, okay, what's buy side, what's sell side? It's usually not clear. So just think from this perspective. Buy side are the guys who actually hold the money, and then they take decisions and they invest the money. So now this money could be invested in a startup, or a Reliance share, or a Tesla share, or they could be working in a hedge fund doing different strategies, but they are the guys who are making the investments. Sell side is usually the guys who facilitate this investing or trade. So for instance, an investment bank would be facilitating a deal where, let's say, Paytm is raising money from Sequoia. So Sequoia is the buy side. Paytm is the company, in this case, it's Fintech. And the investment bank who's advising on the deal, maybe usually it's they'll be advising Paytm because they want to increase its valuation. And they're like a broker who's brokering the deal. So this is, essentially the difference between buy side. And because of this, your role and responsibility also changes, because in sell side, essentially you become sell side mode, you have to sell services, you usually have clients, and you have different sort of clients, and you will be working according to the needs of the clients. In buy side, it's usually your firm's mandate. For instance, so let's dig deeper into buy side. So buy side actually covers different aspects. So one is the private market side, so usually private equity and VC, venture capital. Private equity is nothing but taking equity ownership in a private company. So for instance, if you have different companies listed on a stock exchange, you can go and buy the shares today. But let's say if you want to buy shares of Paytm, or now you want to buy shares of Zomato, who's getting listed. Earlier, when they were private in nature, you can't have access to those deals. So usually you need to be an institutional investor who has large amounts of capital and also access to those companies to be able to make those calls and invest in those companies. And these guys usually are the private equity and venture capital guys. And then you have hedge funds and asset managers. who usually look at on the market side of things. So listed equities across the globe. These guys can think of different strategies they want to devise, or they could be someone like, okay, I have $1 billion, I want to invest in 10 listed equities. I'll split it into different proportions, and I'll figure out what those companies are, that those 10 listed companies I want to invest in. So you'll have different type of money managers who are managing this money and then investing this money. Could be trading or could be investing. In terms of roles and responsibility, again as I earlier mentioned, usually the roles and responsibilities vary drastically. So starting with PVC, you evaluate investment opportunities. So for instance, in Paytm, so you have Paytm, you evaluate the business, you take a call on what the market is like, what the opportunity is like, and it's more on the core finance plus business plus strategy kind of thing. So you have a blend of all those different factors. But it's I must highlight, for instance, in my role, I worked in a private equity fund for 3.5 years. VC fund, I've been interning with these guys for over a year. So in my 4.5 years, I haven't even coded once. So you really don't need those technical skills. And I'm sure a lot of you guys would be having that question in mind. Okay, fine, this is finance, but the guy who's going to be a quant trader, he needs to be good at certain ABCD things. He needs to be good at Python. So in the PVC side of things, usually till now, it's not been a requirement. And over time, maybe things will change. They'll actually automate a few things. They would want coders to run, make financial models on Excel, so they don't want to use Excel, but that's a different thing. But usually these transitions will happen. And then, in terms of career opportunities, options, as I mentioned, so because you have these different types of funds, you can pick your priorities, your interest levels, and then you can pursue roles in some of these different sort of funds. And I think PS and placement companies, as they're listed, so typically you will have like an MSCI or a Citadel. Citadel is a big hedge fund. UBS, Edelweiss, BlackRock. UBS is an investment bank. They also have an asset manager arm. So all of these big groups will usually do a lot of these things. And within each division is somewhere you will have to find your sweet spot. Just in the interest of time, I'll quickly move to sell side. So sell side, description. So these include your investment banks, your equity research guys, your quant research guys. So guys who are providing services for a fee. And then roles and responsibilities. It's again, so you in an investment bank, you could be working at a debt or an equity capital markets where you're raising money for your clients. You're helping, let's say, Zomato get listed on the exchange. So the advisors who are helping them usually will be an investment bank, and you'll have different sort of investment banks. There are different arms, working on those deals. And career options, I think career options and placement companies, I think it's a blend. So in investment banking, usually in India, it's very hard to get a front-end role. By front-end, I mean you actually are sitting there working as an analyst, crafting models and making presentations and then doing the deals. Usually it's very hard to get into those roles. So what people end up doing is, for instance, I joined JP Morgan CRG, which is like the middle office or a back office, where you're helping onshore front-end bankers in creating pitch books or some snippets of model or maintaining comps and stuff like that. So you get an exposure, you get an entry, and then you figure out your way up. And in terms of PS and placement companies, so JP Morgan, Deutsche Bank, your GS, and you have a lot of domestic investment banks also. So you'll have arms of HDFC, ICICI, O3 Capital. So a lot of these firms who are providing these services now. Thanks. I think who wants to go next?
Sure. So I will just give a quick glimpse of what, say, buy side looks from the public market. So we are essentially more focused. AllianceBernstein, for example, the firm that I work in is more focused on public markets. So we do anything that's liquid in equity, fixed income, commodities, or even alternatives. The main idea is to meet the long-term investment objectives of our clients. And that could mean many different things. That could mean meeting their spending needs for every year, meeting their long-term capital requirements for their generational wealth. And that further expands into, say, 2 or 3 things. You do investment research to build, say, an investment thesis if you're working in this space. And then you also have aspects of portfolio construction and then actually executing them to be able to interact with the public market. So that's essentially the public aspect of the buy side companies that work in this space. And you would typically find yourself using skills that are a mixture of what I would call finance, macroeconomics, computer programming, and a lot of math as well. So that was a very brief kind of understanding of the public markets on the buy side. And then we'll quickly run through the prop trading and high frequency with Pratul.
All right. So high frequency, for example, I was going through some questions and you're asking about like the kind of skill sets and the tools that the high frequency traders use. So these are very low latency traders. By low latency, I mean there is absolutely no manual touch in the execution of algorithms. What they're essentially doing is the game is speed. They're trying to get data as fast as possible from the exchange, faster than probably what the others in their market have access to. And they're exploiting the time differences and the price inefficiencies and executing millions of trades in a particular second in large blocks and capturing very small amount of spread on each trade that they execute. For example, the game of high frequency traders is basically to sit computers on the as near to the exchange as possible, pay a large amount of money for the quickest data access so that they're able to access the markets before it reaches the public participants. And using the inefficiencies in the price, they will execute their algorithms basically are going to execute a large amount of trades and exploit the price inefficiencies there. So it's basically called a low latency trading. And to get into this industry, you don't need to have any finance knowledge or background per se. They require developers in C++, FPGA. They require data scientists and like PhDs in maths and physics who can write such sophisticated algorithms. This is a very extremely risky job, as I mentioned before, because, for example, if you have one glitch in your algorithm, it's gonna execute like 1 million shares in a second. And if the algorithm is structured in the wrong way, this can go wrong very quick. A good example of a wrong high frequency trade was back in August 2012, I think, this firm called KCG Capital. It lost $400 million on a single trading day and went bankrupt by the end of market close just because of an incorrect execution in their HFT algorithm. Tower Research is one of the companies that have recently started adding BITSians from the practice school program. It's both hedge fund and a HFT shop, but it's a good exposure. I mean, you won't be working on a front desk trading job out of practice school, but it will give you a very good break into the industry of a trading industry, and you will learn the in and outs of the HFT market quite well. It's also a great name to have on your resume. So if you are interested to explore this space, I would say like it's very important for you to go out and reach out to the traders or the people sitting on the India desk. I think it's based out of Delhi, and just speak with them to get to know more about how their algorithms are basically functioning. If you're thinking of further studies after your PS school or after getting a couple of years of experience, I think Tower Research on your resume might, or there Edelweiss, there are some prop trading firms who are also hiring out of India, for example, Optiver, SMC Global. These are also some of the places you can think about breaking into. In terms of the kind of skill sets that they require, as I mentioned, you don't need to have any background in finance. You need to be very solid in your fundamentals in statistics, probability, linear algebra, obviously good top-notch programming skills in Python, in C++, in FPGA, and then their applications in machine learning, neural nets, AI. For prop trading, the main difference between prop trading and high frequency is prop trading, they're basically market makers on listed products. By listed products, I mean, like, for example, Tesla calls or any equity options that have a lot of derivatives trading and is listed on the exchange. And prop traders are the people who are providing liquidity on those options. This industry was also, the banks were also a large part of the prop trading of the market making industry, but in the recent times, we have seen a major shift of market volumes driven to prop trading shops over banks on equity derivatives listed products. Banks traders, they specialize more on more structured products, stuff that is not listed, stuff that they structure on their own and sell it to the clients and then make a market on it. But prop trading firms, because of their very sophisticated trading algorithms and computer systems, they have quickly taken away the market share on listed equity derivatives from the banks. In terms of skill sets, it's very similar to a high frequency trading shop, but prop traders, they also do a lot of high touch. So the C++ developer, for example, it's required more on the high frequency shop than a prop trading shop. Prop trading shop, the interviews that I have taken in the past, they were more focused on basic probability and statistics models, stuff that you really studied, semester 1 at BITS. But even I was not very well versed back then. I did not know the applications of it. But when I came to grad school, I had to go through all the math once again. And then I realized the applications of probability and statistics. So that one course really helped me take interviews and apply for interviews for a prop trading shop. So I would say, like, if you want to become a prop trader, basically a market maker on equity listed derivatives, for example, developing sophisticated trading algorithms, you need to go back on your basics and fundamentals in probability statistics, linear algebra, and good Python programming skills. Shashi, do you want to cover fintech?
Yeah. Yeah, sure. So I think, in the interest of time, I'll just quickly run through it. So fintech, again, guys, as, been mentioned throughout the deck. So fintech usually are these, introduction of technology to the financial services. So you see a lot of these, fintech guys who are coming up, and there are different roles within those fintech, with those fintech players. And it's a blend of finance plus tech. So you could, also end up working as a product manager or as a developer for a fintech firm, or you could work in the finance or the investment strategy, or, it depends on the firm to firm. So you'll have, your roles could vary from developing technology, or you could be doing market analytics from them, or, it could be cleaning the data set. So you essentially, what's the value out of a fintech? So what they say is that data is the new oil. So you get data of your customers, you run algorithms, you make sense of that data, and then you use the data to lend or to give credit or to borrow or to provide payment services. So you could use your value adds, your learnings there, and there are multiple roles within fintechs as well, with some of which you could target. A few instances of these would be Dash Financial, Bloomberg, then all these new age fintech startups you keep on hearing about, starting from the likes of Paytm and all. These are good places, and an emerging field, so to say, developing in the financial services field.
All right, thanks Shashi for that quick rundown. So if you could move to the next slide. So here we have something that's more immediately relevant, or something that's right now actionable for everyone that's watching. So how do you shape yourself in your, say, academic journey to kind of break into, say, the early positions in financial services? And this is how a typical process would look like. You would focus really well on courses such as that are math heavy, probability and statistics, linear algebra, derivatives that involve a lot of math when it comes to structuring those. And there's courses like portfolio management and security selection that kind of help you prepare for having those interview conversations about the investment thesis that you could be working on, given any buy side or sell side shop that could typically ask you to pitch, say, a stock or an idea in your interview. Macroeconomics, I think, is at the core of what, say, the buy side does in terms of investment management. And even a lot of sell side research positions in banks lay a lot of emphasis on macroeconomics as a subject, because they believe that helps you build on further research ideas and investment theses. So take these courses very seriously, and instead of just going through them as a theoretical course, make sure you know the applications of these. How would you apply, say, a simple linear regression in different contexts, and how would you change that depending on your application? So that's more important than knowing what a linear regression is, for example. In terms of books that could help you prepare for an interview, this is very different from taking a course that's preparing you for a career. This is a book that would, say, prepare you for the immediate interview that you might have tomorrow in terms of puzzles, programming questions, brain teasers, PropStat questionnaires. So the books that we typically follow in quant heavy programs are the Quant Green books. So if you just literally Google that, you will find it. And on the buy side and on the other less quantitative aspects of the business, in the financial services industry, we have corporate finance, which is sitting at the core of, say, all of banking, all of private equity, all of VC-like activities. And there's a lot of emphasis on active portfolio managers. So everywhere where you don't have anything that's looking like a passive ETF, you will be using concepts from, say, active portfolio management and having a quick look through these books would help you in your interview. Make sure, I mean, if you're not aiming to be a part of, say, private equity, VC, which are very difficult to break into, programming is going to be your friend. It's always going to make your life much easier. You will look much better in an interview if you have it versus not having it. So anything that's to do with prop trading, high frequency, and a lot of roles in sell side, and a lot of, say, systematic investment strategy roles in, say, buy side. So places like AQR, where Pratul and I have worked in the past, these places require you to program for your day job. And that can be Python for your data analysis, or C++ is your scripting language friend. So these people will help you out all through at least the early parts of your career. Networking. Now, this is something that will help you get a job. The best time to start networking was yesterday. You should definitely start reaching out to your alumni. There's a big group of people who work in the United States from BITS. You have a ton of people in Europe who are kind of pursuing the careers in finance and kind of industries related to that. So you make sure you're networking through different avenues. Competitions could be one where you meet, say you go to an ISB's competition in India and you meet a lot of alumni who is already passed out from BITS and is doing the program at ISB and probably has some job opportunities lined up. Use LinkedIn to kind of shamelessly cold email, or reach out to people to kind of just connect. And people are always open to doing that if they see a genuine purpose behind it. Participate in an event like these, the one that we're having today, and alumni is definitely something that's a rich resource for you to fall back on. Interviews are something that, how do interviews look like when you're, say, trying to get in this industry? You're going to have a lot of programming tests on HackerRanks for roles which require quantitative and programming abilities. Math and programming is going to be the core, at the core of every interview that has anything to do with building an investment thesis, building investment research, constructing a portfolio, taking a view on the market, or even, say, providing services like market making. Math is at the core of it. Market commentary helps you hold good conversations with senior people in the team, the hiring managers who will ultimately decide if you're going to get that role. This is going to be the differentiator there. This shows your interest. This shows how informed you're about what you're trying to apply to, because there's going to be a million people who are going to have similar technical skills, but this is going to be a good conversational point with people who are, say, 10, 20 years tenured into the industry. So having this framework on the back of your hand will help you kind of get into at least a career that you choose. And there's obviously many aspects to each of these. So quickly, we will jump to the next.
I just want to chime in and add in some points here.
Yeah, sure. Go ahead.
All right. So what Shashender was talking about in terms of interviews, just to add a few more things, what the basic process looks like, you will have 5 or 6 rounds. The first 2 rounds will be taken by the junior people on the desk, for example, like second-year analysts or associates. The interview process there is going to be more technical, since they are the people on the desk who are actually doing the heavy lifting, and they will be grilling you on all technical aspects of the job. So HackerRank test, math and programming questions you can expect in the first 2 or 3 rounds. After that, there will be an HR interview. And once they figure out that you are a good cultural diversity fit, or if you're just like a good fit for the team, then they usually pass on your, if you've gone through the first 3 rounds, they pass on your resume to the more senior people in the team. The more senior people in the team they basically have the last call. So to impress them, you don't need to show your technical skills a lot, because it's going to be more high touch. So you're going to have more conversations about how to drive the business forward, the ideas you can put forward to make the desk more efficient, to automate a few things, just a general sense of how closely have you been following the markets. You don't really have to show off. If you do not understand anything, they really appreciate if you come out and ask as many questions as you want. So it's not like before an interview, you just Googled a few pages, read a few things that are happening in the market, and then the next day you come out and start showing it off in your interviews. That really doesn't help, and they're able to see through BS very quickly, very clearly. So following the general trends in the market is very important, because these help you drive conversations with the more senior people on the desk. And obviously, like, it is a good note to start putting ideas together and discuss with them on how they think about situations, how they handle, because they're sitting on a desk managing 20 people in a team and liaising with 20 different desks on a single bank. So it's really about how to drive the business forward and generate revenues for your own desk. So market commentaries come really helpful in that aspects. And regarding networking, based on my experience when I was at BITS, I'm not sure the culture has changed since then, but we are heavily reliant on our practice school and the placement division. They do an outstanding job in trying to get companies on campus. But what we used to do was complain a lot that, XYZ company is not coming to our campus. We don't have avenues to reach out to them and sit for placements. They do 70% of the job, but 30% of it is also you. If you don't have companies coming to the campus, it doesn't mean they are not recruiting. There are tons of avenues that are available where you can reach out to them and express your interest. So as Shashender mentioned, like networking is one of the most important factor in landing a job, especially in finance, because it is a very close-knit group and they really need to get to like you before they start spending the time in giving you a chance to interview. So you really need to be more proactive in reaching out to people. I would just say start randomly by Googling like top 10 prop trading shops in the industry and their India offices, and start putting in your resumes online. Most likely you will get a hacker rank test, and that would be a good place to start. It does not matter if you fail in the first 9 of them, because it is a continuous learning process. We used to face rejections like 40 or 50 from different companies, but it was all a good learning process. And by the end, when you get to the 51st, you have already gone through and learned from your failures in the past. And it will definitely help you start networking very soon.
All right, so thanks for that, Pratul. It was very valuable to kind of walk through the interview process. Let's quickly, I think we're already running out of time. Let's move to the next slide and talk a little bit about, say, what you could do in the recent future, in the near future, after you graduate from, say, an undergrad degree or having worked for 1 or 2 years. So Pratul will talk quickly about, say, MS and certifications, and Shashi will chime in about MBA and Masters in Finance.
All right, so we get a lot of questions about if you are from a non-economics background, or is taking minors in finance really important to break into finance? It's a common misconception, and the answer is no. Most of the finance roles that are available on the market side right now, they do not require you to have a prerequisite in finance. They need you to be very strong in your fundamentals. Finance, they're going to teach you on the desk, and the products that each desk handle, they're so specialized. You are basically not going to learn about them in your courses and books. So to have a general sense of the industry and what the desk is about will help in your conversations. But if, for example, you have not studied SAPM course or derivatives in your 3rd year, it does not matter. To help you get to an interview, it is important that you generate an interest. For example, if you're from an electronics engineering background and you have no idea what finance industry is, I would say, especially in India, getting a CFA certification will help you. Start in your 3rd year or your final year if you haven't yet. It's kind of an expensive exam, but it is basically a license that helps you break into the industry if you are from a completely non-related background. Shashender and I took our CFA level 1 in our 3rd year. We did our level 2 in final year. So by the end, when we graduated from our practice school, we already had a fair bit of idea of what to expect going in. CFA is a very diversified curriculum. There are 10 major courses that they offer, and it's a 3-month-long intensive study program. But the certification, even if you are not able to complete level 3 by the time you get your MS applications, getting to level 1 or level 2 certainly shows an interest, and it stands your resume out if you are from a non-finance background. It also gives you a good overview of courses like portfolio management, derivatives, economics, econometrics, if you have not taken a minor in finance, for example. So my recommendation or my advice here is, if you want to break into finance, CFA is something that you should seriously start considering. It's kind of an expensive exam, but ultimately I think it'll help you stand your resume out. Coming back to MS, the 2 major questions that I get asked is when? Right after college, or is work experience necessary on your resume? And the second is, how much is GPA important? Now, I don't want to prejudice you. GPA is definitely important. I haven't met someone yet who was a 6-pointer and got a chance to do their MS from Princeton, for example, which is one of the top-notch schools who offer MS in finance or financial engineering. But there are other schools who are not very GPA-centric, and you need to have a very strong statement of purpose where you're able to knit down your story together on how you landed here, what was your journey through your undergrad so far, and what are you looking to do in the future. So there are other aspects of your resume which you can strengthen if you do not have a strong GPA. CFA certification, like I mentioned, some of the competitions that you actively took part in outside your curriculum, some of the courses you might have done online, couple of projects that you did with your professors at school or even independently, and what you found interesting about it and how it can help you land a job in the finance industry. So these are things that really you should shed some light upon when you're writing a statement of purposes. The main colleges for MS in financial engineering courses are Cornell, Columbia, Carnegie Mellon, Georgia Tech, UC Berkeley, UCLA, Princeton, MIT. So there are like 12 different colleges which employers here recruit actively out of. So these should be on the top of your list when you're applying for applications. I applied for my MS right after practice school. I didn't stick around for a work experience. It turned out okay, but I think when you come here, you start networking on day one with your employers. And if you do not have a background in finance, if you do not have an idea of the industry, you will find it difficult to have conversations with more senior people in the industry. So after practice school, even if you have like 1 year of experience when you have been in the industry, it gives you an advantage in your conversations. But if you feel you're confident enough and you can hold conversations and you do not want to stick around and try to land a front desk job, it is completely okay to apply for MS right after your graduation. What are you looking for out of an MS? A lot of people go on to finish their PhDs in similar fields because a lot of big hedge funds and buy-side quant shops in US are majorly hiring just PhDs. They do not even hire MS students because the kind of skill sets that they require are so specialized in operations research, for example, or statistics. But of course, there are other places you can land a job in with a grad degree. I mean, for Indians, it kind of helps if you're applying for an MS, if you want to work onshore, but you will find that your peers that you're working with, they do not have an advanced MS degree and they get recruited right out of Ivy League schools in the undergrad programs. But I suggest that MS and CFA are something that you should start considering if you're in a third year or final year, and try to back up your story of what you're going to do after that. Shashi, do you want to talk about MBA?
Yeah. So I'll talk from the MBA and the MIF perspective. So, similar to what Pratul. So first of all, I think Pratul seems to be like a very good candidate with a good GPA and everything done at the right time. So I'll also give you, I'll give you my background. So guys, those of you who have a low GPA and who probably haven't started their CFA, they didn't know what a CFA was prior to this session. So don't be disheartened. Let me just give you, and this is not to, encourage you or to say the things will be right. So I was an ACB when I was at, Pilani, and I had probably the lowest GPA in the second semester, in my first year. So, and from then, and I ended up with a 6 CGPA. So it's not that bad. I think what you need to realize is that what's your value at and why would someone want to hire you? And that's where I started. So don't be disheartened when you think about those things. But then eventually, if you have, I think one biggest regret I have is maybe I could have actually studied and gotten a good GPA. It wasn't that hard. It's just I chose not to. So it's not like I'm stupid. I'm not capable of. So, and because of that, what I did was, so I screwed up at school. I started with a firm in finance. I've shifted my whole entire focus. I moved out of the tech thing and I really wanted to focus in finance. And when I started with, so MBA and MIF sort of become an impediment to grow in investment banking and PE and VC if you're coming from an engineering background. And this sort of holds true, especially in India and US. Europe probably is a different geography where you don't really need an MBA or a MIF to grow you. If you start working, let's say, at a PE fund, you will keep on progressing. And typically, I think the major question people have on MBA is, what about global versus India? I think it's completely your call. When I started working, I had no ambitions to do an MBA. I knew my GPA was bad, so I always thought I never even stood a chance. And then, while I was working, I realized that, not having an MBA or any master's degree would probably be an impediment to my growth, and that's something which I don't want. So I started aiming towards that. And And a lot of these investment banking and PVC roles usually have a pre-MBA analyst program. So these analyst programs are a tenured, like a 2-year program where the firm itself expects you to join, understand what the role is, work for 2 years, and then pursue, go for a global MBA or, or your MBA and master, not join them or maybe join them depending on, what your relationship is. And this is where the difference comes in. So if you want to do an Indian MBA, my sense is that you should, some people start right out of school. You could probably wait up to 2 years, get a good work experience, and then join the top schools, which are ABC. You've got ISB as well. ISB probably more on the higher end of experience. But so these are your Indian options. And usually, if you're graduating with an MBA from India, your chances are higher that you will be recruiting in India with different firms. It's, you will get your opportunities and shots, but moving out of India is slightly unlikely. However, if you want to actually move out of India, you probably want a bigger brand name on your CV. Indian names are recognized, but not at, where an M7 or an LBS or an NCR would be recognized. And that's where the global MBAs come. And if you want to target global MBAs, my suggestion is that you should be very clear what your path is going to be, because for an MBA SOP, it's not just, your GMAT or your GPA. It's like it's a total story. So what sort of a package, Shashi is. So, it comes from that perspective. And my sense is, usually 4+ or 5+ years is an ideal time where it's, all of I think, even though it's written US Europe, I think my suggestion would be, pursue MBA from a top 10 or top 15, global B school, or, in India, if it's top 5, top 10. Otherwise, what happens is your experience gets diluted. You'll end up spending a lot of money, and then you'll realize probably you're not getting the shot at good opportunities you want to. So then it becomes a tough decision. But that's what, you should be targeting. And why? It's simple. So, career progression, it's higher brand equity. And also, if you're going for a global MBA, it will give you a global experience. Even in, an MBA experience is also very different from an engineering experience. So you will see people from different backgrounds, people coming from different thought processes. You will see stupid people. You will see even smarter people who are, usually we think that, okay, fine, we are in BITS Pilani, maybe, we have our parallel counterparts in IITs, and these are the smarter guys in India. But you will be surprised that I had a US military guy in my MBA batch who was equally smart, if not more. So, that sort of exposure and thought process is very good for your growth. And how to do it? So the simple way is, for global, it's GMAT. For India, it's, CAT. And then you have your similar recommendations and SOPs. And what comes after, typically people take 2 routes. One, you could continue with your previous firm. You could move to consulting. You could move to you could move to higher, bigger options in private equity, in VC. For instance, I started with a fund in London. I was earlier working in India. So it was a good, otherwise, if I had to really move from India to London, it would have been super hard. And one other thing which people also do is entrepreneurship, but I think this is too early a conversation for that. But this is usually, what comes after MBA. And MIF, I wouldn't spend too much time on that, because MIF is identically, at least at LBS, we have a MIF program. It sort of replicates your MBA. You have similar experience when you come. You have similar schools who offer that. It's just that your concentration is higher on the finance focus. So some people tend to opt for that. It's usually a 1-year course. You save money, you save time. However, you can't after MIF, you can't really move to a consulting or a tech role, or work with a startup. So usually people use MBA as a platform to explore different things. MIF, the flexibility is little, but both of them will serve a good purpose for you guys.
All right. Thanks, Shashi and Pratul. I think we are gonna quickly now enter the question and answer part of the presentation. So we're gonna skip the next couple slides. This will be available to you after the presentation. It's kind of super easy to kind of read through that. Let's take questions now. Let's see what you guys have written to us. So, first question here is, what is the first step that an absolute beginner can take to gain an understanding of finance concepts? So, if anyone would like to jump in on this. All right, let me do it.
Okay. I would say start reading CFA books. Just go online and find a CFA level 1 course material. Even if you're not taking the exam, it helps you because it is very well structured. They have narrowed it down to 10 different industry profiles that you'll be working in out of finance grad. And it's very well structured in the sense out of the 10 bifurcations they have divided the chapters well. The material there are extremely relevant. If you start going through finance books, I mean, there are a lot of things that are redundant, that things that are not used in the industry or things that you would not be able to relate with. But the CFA curriculum, I think, is very structured. So I would start by reading CFA level 1 books.
Got it. Yeah, that's definitely helpful. Anyone else wants to chime in, or we could move to the next question?
Yeah, so there's like just this little bit of thing that I mean, we like all of us here and also the guys in the audience, we come from an engineering background, and I think both Pratul and Shashender stressed enough on how much of statistics and all of those courses matter. So a lot of people who might have a problem with the lingo and understanding the concept, because a lot of time you understand the underlying concept, but you just not be very familiar with the jargons that are being used around or the lingo that most of the financial world is using. Try approaching those kind of subjects from the angle that you're used to. You have a very fundamentally strong basis in statistics and mathematics and quantitative skill set. So you can also approach those kind of subjects wherein you are just Googling like basic stuffs on Investopedia, reading about it, following the financial news, trying to garner those concepts and tying them back with the skill set that you already have in terms of the mathematics end of it, the computation bit of it, and getting a view from that point of view. So maybe you'll get a little bit of familiarity from that angle.
Great.
All right. So the next question that I see is, what are the roles in finance which do not need coding at all? I would say banking. On the banking side and the private equity side, these are more markets-oriented role, capital markets-oriented role, which are spreadsheet-based. So all you'll be doing is making slide decks, creating pitch books, creating valuation models on Excel. These are more core finance roles and not so quantitative. So if you're not a math person or programming person, I think banking would be the right fit for you.
Yeah, I just want to chime in. So Pratul has sort of maybe oversimplified. So you do require math. So don't get him wrong. I think he comes from the background saying that so you don't need the coding stuff and everything, but the bare minimum understanding of stuff. So so in banking, you have investment banking roles. You have on the buy side you have private equity, VC funds. Essentially, what those guys are doing is analyzing a business. Now, when you analyze a business, you understand its strategy, understand its products, understand the people, understand the finances, understand marketing, operations, underwriting, everything. So you need to be a person who has a business acumen, who has a big picture view. And that doesn't mean you wouldn't delve into detail. So I in one of my deals, I was, we were evaluating a general insurance company in India. I knew in Delhi, in one of the pockets, that company's underwriting of Hyundai i20 was very profitable. I know in India, in North India, white Toyota Fortuner is stolen the most. And those sort of insights I got from an insurance provider's analysis, which we were doing because we wanted to invest in that company. So any sort of question that comes to you will be covered, and that will include math and general understanding. But that doesn't mean you will need to be, you need to know the coding and everything. So and I didn't have a minor in finance. I didn't, I saw one of the questions that do you require a finance PS or a finance minor to get into finance? No, that's not true. So at the end of the day, you need to realize there is no perfect CV, there is no perfect job, there is no perfect profile. In your interview, you need to provide and to show those guys, okay, what's your value add? If someone is interviewing you, why we should hire you? And it's not like a filmy scene where you have to provide a value and sell a pen to that guy or whatever those things happen. But essentially saying that, okay, fine, these are my skills, this is what I've learned, this is what I want to learn, and this will give me a good platform, and this is how I can contribute. So you need to identify, and that's why you need to really dig deeper. Okay, what is that really interests you, and where is your value add? And all of these things will be answered. But to summarize on the question, so technology, so banking role, investment banking, M&A advisory, private equity, venture capital, don't really require any of the coding.
Yeah, just to build on it a little bit, the thing would be like the particular role that I'm in, that I sit with, has little or no exposure when it comes to actually using, like, say, programming skill set out there. But when you'll enter the risk world, you'll clearly see that there are teams which will be pretty intensive when it comes to using coding or using models and statistical calculations, and it's that intensive. Whereas what my work revolves around is serving like the regulators, coordinating with them in order for the information that they would require, what we are monitoring, and the same thing with the senior management. But at the end of the day, like what I think Shashi also wanted to highlight is that you need a basic knowledge of most of the things, even if you want to function in an environment which is within the finance world. So do not expect that you will have no acumen related to programming skill set or basic modeling or understanding how technologies are working. There will be no single role in isolation which will not have any of it. But yeah, for sure, you will have certain roles which will be more intensive when it comes to their approach in trying to do their like day-to-day work as compared to the other ones which might not have a lot of those skill sets required on a day-to-day basis. But all of those will have a basic general acumen that would be needed from both technical as well as financial point of view. So just keep that in mind.
All right, guys. I think that was very helpful to answer the question. I see two more questions, which I think will be answered together. So what are the components of a good resume for finance roles, and what other skills do you have in CV other than a minor in finance that will help you give some edge? So I would like to take this a little bit, and you guys can jump in after I have shared a little bit of it. So, I mean, even before we talk about the components of resume and what you're going to put into it, sticking to a standard format is important. Your resume is not going to be picked if the format is not readable by automated readers. So all the recruiters right now use algorithms to go through resume and pick up on key aspects of the resume to pick your profile or even call you for the first round HR interview. So if you do not stick to a standard format that's either friendly to a automated reader, or that's something provided by the placement division, that is going to give you a disadvantage in your first round interviews or even getting into an interview. So having said that, having nailed that, the great components to start with would be just have your major listed down there and some academic inclination as to why you are applying for this job, for this opportunity. It's always a great idea to tailor it to the position that you're applying for. GPA, as everyone said, is going to be a friend. So it's good to have a decent one, at least. And that's definitely going to help you go through that automated filter for GPAs that the companies typically tend to have. I think placement division is the best place to kind of reach out for these guidelines. Other aspects would definitely next would come in the internship experience that you might have gathered, or say, if not an internship experience, some experience in projects or competitions. So just writing very, very briefly about what you've done in these projects, and then making it relevant. Always connect your resume, always connect whatever is on your resume to the opportunity you're applying to, and make it concise. Do not write down many, many lines. It should be a lot of blank space. There should be a lot of blank space in your resume. It should be easily readable, and always think of it in the terms that it's an expensive real estate that you're having in front of you, that you have in front of you. So do not waste it with extra stuff that is not relevant to a job opportunity, and always tailor it for each application. Apart from, say, internship and project experiences, you can maybe write a little bit about, say, a couple of courses, expand on it, because I don't think a lot of people will have a lot of experience going into this, professionally speaking. You can always get asked the question, what was your, say, favorite course in this and that, or say the certification that you were studying for or are studying for, what is your favorite aspect of that? So maybe expanding a little bit about that in, say, project or academic inclination would definitely help you have a good conversation around it. Everything that's required in an interview is to have a rich conversation in those 30 minutes. So that can be done in many ways. And you should definitely list your technical skills and certifications in all honesty. Do not lie about having, say, experience in C++, because that's going to get caught in the first question they are going to ask you, because it's not going to stop at the first question. Let me assure you that. So do not be dishonest about those things. It's good to have 3 skills for each of the technical aspects, and maybe certifications if you have any, and just keep it very humble and honest in that aspect. It's good to highlight, especially for banking oriented roles, especially for roles which are more people facing or potentially people facing. It's good to highlight your extracurriculars that show either your intent to kind of take initiative, to do the hard work, to stick to a timeline, to stick to a disciplined approach towards putting together anything for that matter. So that's definitely going to help your case. So, I mean, putting this together in a clean format that's not too tiring for a reader to go through is key for you to build a good resume. you guys can jump in if you have any other aspects to kind of talk about.
There's just one little small thing which I think is like a typical mistake that even I made back in college, and a lot of kids still do, wherein I will don't go for those fancy formats. To be honest, like there's a person who's on the other end. They want a very simplified thing wherein there is a readability involved. As Shashender mentioned, there are a lot of people, like firms which are using programs in order to shortlist you on the basis of your resume. So especially when you're in college in your third year, in your fourth year, and you're thinking that those standard formats are just a little boring. There's a method to it. There's a reason that they're boring. There's a particular format that is followed. There is a readability involved, and from a resume, from a person who's reading those resume end of it, he's not looking for infographics. He's not looking for those bar graph when it comes to your skill set, which is something that I typically see when a lot of people who are like in the third year or fourth year and are constructing their first resume. Try avoiding it. Be very crisp and clear in your language. Use terms which make most sense. Be a little statistically driven. Like if you're talking about the goals that you've achieved, talk to them about the fact that what kind of efficiency did you lead? What number of people were you leading? If you had some leadership qualities and stuff like that. And yeah, like it was already highlighted, do not lie about anything. Like if you have a skill set, put it out there. But if you don't, just don't take the risk, because eventually at some point in that entire interview process, it's just gonna bite you back in case that is not something which is already your expertise.
All right, that's definitely helpful, everyone. So another question that I have from the YouTube chat says, rather asks, is it helpful to be a part of Wall Street clubs on the campuses that you're a part of, or does it harm you if you're not a part of any of these clubs? So I think Pratul had good experience running a club like that, so I think he would be the best person to take it up.
I mean, you cannot single out that, being a part of this club helped me get there. It's a combined experience, but if you want to be a part of the club and do and organize productive events, watch finance-based movies together, which we used to do a lot. We used to, like, for example, this movie called Too Big to Fail, right? It was based on the 2008 financial crisis. It was essentially a documentary. And I think as part of the Wall Street Club, we have watched this movie 3 or 4 times, and we try to drill down into the very basics of what exactly went wrong in the crisis, starting from the kind of products that were trading wrong, what kind of insurance companies were investing, what the rating agencies did wrong. So these are like good learning experience you can do proactively as part of the club together. One other advice that I would have for the people who are running the club is start playing more market making games, because it's what I've been asked a lot to do in my prop trading interviews here. They will give you abstract problems. For example, estimate the number of COVID cases in some country in Africa on a daily basis and estimate the amount of vaccination doses or death counts. Now, you don't really need to know the numbers, but you just need to develop a fair value of what you think the number is. There will be one market maker and 10 traders who are playing the game, and they will just be, each trader has a fair value of what they think the number is. And the market maker on the other side, he's just providing liquidity in the market. So the trader is going to bid, he's going to offer, and the other trader is going to offer and he's going to bid, and he's going to drive the market in the direction of what the market is trading. So these games are really popular in interviews here. We did not have much color into it when I was running the club back in college, but I would advise you guys to start doing these more often if you're looking for trading interviews. I do have a couple of PDFs which explain this game in a little more details. I'm happy to share it with the BITSAA alum team, and feel free to go through them.
That's helpful, Pratul. That's very helpful. So another question that I think is relevant in this context is, so there are some people who are asking, what does a day in your job look like? And since I think we come from very different places in terms of our job responsibilities, why don't all of us just share, say, a 1-minute kind of walkthrough about what a day would look like or what you are typically expected to do, because that's helpful for people to understand what they're signing up for. Shashi, you want to start?
Yeah, sure. So currently I'll talk about, the P and VC side of things. Typically, in a day, you'll start off So okay, let's cover what all is covered. So usually in a PE or VC setup, you are evaluating investment opportunities. So you join either as an analyst or an associate, senior associate, and your responsibilities keep on growing. And when I say evaluating investment opportunities, it's about digging into, let's say, the investment of, I was talking about Paytm. So for instance, and usually what will happen is Paytm is raising money. I, as a PE or a VC fund, has an option to invest in Paytm. And now, how do I make that decision? So I'll take Paytm. I'll do a fundamental analysis of Paytm. So, understanding the business, the products, the market viability, what's the market opportunity. So all sorts of those questions. And usually in a day, you'll always have like a live deal that's going on, and your work, different aspects of a work on that deal will be going on. And then there'll be a second aspect, which is sourcing. So I'm also responsible for finding the next Paytm. And for that, what I need to do is I'll need to speak to different founders, different companies, make connects, network aggressively, attend seminars, make new connections. And this all, and usually you used to end up having a coffee chat or going to the office, some people to meet. Now it's happening on Zoom. So, but yeah, it consumes a lot of your time in the day. And then on the side where a live deal is going, usually at junior positions, analysts and associates are responsible for, whatever deliverables have been decided. And day in, day out, we'll be working on those aspects. So that could include working on a financial model on Excel spreadsheet, or creating a pitch book in an investment bank for a company, or creating an investment memorandum. Then in a PVC setup, we'll be creating an IC note, which is the investment committee note, which essentially you present to your committee and then get an approval for the investment. So all of these things are, part of your day in, day out as an analyst or an associate at PVC and investment banking.
Pratul, do you want to go next?
Sure. So I see a question that was talking about on sales and trading daily life on the bank side.
Pratul, we're talking about what a day in the job looks like. So go ahead with that and we'll move to the next question.
So short answer is my day starts at 7 a.m. For example. There are four main asset classes: equities, FX, interest rates, and commodities. I'm on the interest rate side. So we have hedge funds who are coming in during the day with the investment thesis they've formed, and there's a particular trade that they want to execute. Now, the products that I trade are interest rate derivatives and exotics, which is very structured and not a liquid product. So it's not as easy as just going to the exchange and executing a transaction. So the hedge funds, they come to us and they ask us to make a market on their products. And what we do is we have to first mark the volatility that we think a particular asset is trading in. We have to price and model the structure that the hedge fund is asking us to. We have to then show them a market. And if we trade with them, we immediately have our hedging strategies lined up, and we go out and hedge it in either the interdealer or the broker markets, or some on the exchange as well. And we're continuously doing it throughout the day. Now, since I do not work in a very liquid market, we do assume risk on certain type of products, because especially when you're trading derivatives, there are so many different kind of underlying risks. So it's not easy to be able to hedge completely and instantly. So we do assume risk on certain type of instruments, and it's basically your expertise on how are you able to liquidate your risk or manage your risk better, as well as driving activity forward when you're trading with the buy side clients that you deal with on a daily basis. We talk with investment managers, we talk with portfolio managers, we talk with salespeople on the buy side and both sell side. So a trader on the market making side is basically a bridge between the conversations that a salesperson is driving with the PM and the kind of strategies that the PM is looking to do on the market, since you are sitting on the middle of all the action that is going on. So a major day for me would constantly look like making markets for the clients that are coming to us, trying to find different hedging strategies where you're able to offload your risk, trying to develop new models constantly to optimize your equations better, to optimize your pricing models better, constantly marking your volatility in the direction of where the market is trending forward, and also reading through news and reading through research reports that is coming forward, just to form a longer term view on the products that you're dealing with.
That's helpful. Shorya, do you want to go next?
Yeah. So essentially on the risk side of things, and especially if you're going to be on the back office end or the middle office end of the bulge bracket investment banks, for most of the days, your timings from that sense would be aligned to particular desks or particular regions. So you would be signing in according to that. Most of the work is primarily divided into your daily work. So essentially, you're assessing the risk for the business on a day-to-day basis, and you're essentially like for business side of thing, like you're making a pitch book. On the risk side, you're essentially making senior management decks for them to have an assessment of. You're trying to give them a day-to-day view of where we are steering the organization as a whole. What kind of portfolios are we holding? What kind of risk exposures are we holding? On the other end, from a month-to-month basis or a quarter-to-quarter basis, depending on how the regulators come in. So you would have BaFin coming in with some kind of requests, or your JFSAs or SECs coming in. So you would have to jump onto that and cater to those particular requests and draw those data. So now you will not have a lot of client interaction from that end, but then you'll have a lot of stakeholder interaction because you are that middle office providing the entire overview. So you may have to close touch with all the IT infrastructure and IT people to draw the data because it's a very data-centric work. Or you would have, you'll be really closely in touch with the traders, what kind of trading activities that they're doing on a day-to-day basis, what kind of limits are they operating with, and all of that kind of stuff. So that is what the BAU looks like. And in general, I think across the board in most of the financial services, wherever you go, as compared to the standard of other industries out there, it's going to be a little more laborious, and there is for sure a little bit of more money, more time that you put in as compared to any typical job that would be a comparative domain here.
Thanks, Shorya. Thank you. So a day in my job looks like typically two things. We're interested in investment research and then constructing a portfolio based on that investment research. A typical example of investment research will look like answering questions such as what would a certain kind of monetary policy or fiscal policy do to the entire gamut of asset classes like equities, FX, commodities, alternatives, real estate, etc. Having a view on these different asset classes and various aspects about these asset classes helps us build an investment thesis into as to like what view we want to take on it, directionally speaking, and how much of it needs to be expressed through portfolio construction is where we actually put together strategic allocation advice for our clients, depending on their investment objectives. You would use everything that is covered in mathematics, statistics, say programming and macroeconomics to do all these activities. And your day typically looks at more long-term investing as compared to something that has a quicker turnaround, for example, Pratul's job does. So I think that pretty much leaves us and brings us to the end of this conversation that we had planned. And I know there's a lot of questions that we still have coming in and trickling down on either of the chats. What you can do is keep posting these, and I would request BITSAMP folks to kind of collect these together in broader themes and maybe email it to all of us, and we can maybe all put in a few pointers for each of those questions so we don't leave a lot of them unanswered. So I think that was a very fruitful conversation with all of you. And now I'd like to turn it back to BITSAMP to kind of close this out. Thanks, everybody.
Thanks, Shashender. On the point of some questions which are still unanswered, I think what I'll do is I'll share this with everyone in BITS, and I'll give you them the link to your LinkedIn profiles. So you guys can follow all the speakers. And like even right now, if you have any questions, or later on, if you have any questions, please do reach out to these speakers, and all of them will be very happy to help you out. So with that, I would like to thank the speakers for taking out time from their extremely busy schedules and helping us out with this session. For the viewers, thanks for joining us on a Sunday night. And I know there is a match going on in parallel, so it must be really hard to focus on two different things. As for the next steps, we will be organizing a series of sessions, series of events, basically. So we'll organize one on resume review. So make sure you have your resume ready. And then we'll also do one round of mock interviews with the alumni. We'll connect you with the alumni of your choice in whatever field you are applying for, in the placements or in the internships. So make sure your resume is ready. These sessions will get started from next week onwards, and we'll send out a registration form. With that, I would say goodbye for the night, and have a good week ahead. Thanks.
Great. Thank you so much, guys.
Thank you, guys.
Take it easy, everyone. Bye-bye.